Hindustan Unilever, after underperforming for a while, the stock is now down 2% post its results yesterday. We spoke to the management on a whole host of issues, right from demand to Horlicks to even the way their ice cream business has panned out, along with the underperformance of the stock as well. So let's hear out what the management had to say on all of these issues and more.
Overall on macro, the way we see on rural, we had spoken about that rural usually is always accretive to FMCG demand. And we had seen that was an area of overall business which had seen in macroeconomics, given the amount of cumulative inflation and the demand outlook, we'd seen a purge of disposable income. And hence we'd seen rural demand coming off. That we have started to see gradual recovery as we had expected. Is it playing the role of being accretive to FMCG? Answer is no. But is it improving sequentially? Answer is yes. The hope with we have seen good forecast of monsoon and with overall macroeconomics, I do expect the recovery to continue to happen. What is leading the growth for FMCG this point in time is urban. What is leading growth is organized sector, which is modern trade and e-commerce. What is leading growth is premium. In that part of the business, we have seen growths have come back properly, and we've done a pretty good job as Hindustan Unilever in those parts of the portfolio. And hence the key watch out will be continued recovery of overall FMCG, especially the rural demand from where it is. Coming to a question of Horlicks, overall we have grown pretty decent again in this quarter, driven by volume growth and limited amount of price growth, which was the reason of we had spoken about commodity price increases in barley, wheat, and milk, which have started to plateau down. So we have some amount of price growth and volume growth put together. We have grown in high single digit in Horlicks. So it's a portfolio where the job of making the portfolio stronger, the plus range which we have activated across the country, the margin job that we had in terms of unlocking operating efficiencies, all those have been done very well. And we do believe where we are with increased penetration that we have done in the last few years and improved market share, this business is yielding good results. As we spoken last time, the key focus for us is to keep driving consumption. And hence entire home to home and building consumption is our focus priority.
So no change of perception due to, all that has happened with regards to all these MFDs, where they're looked at, there is a lot of sugar in it, etc. It's not as healthy.
Nutritional, functional nutrition is important for the community. We know that large part of even the more urban population is deficient in micronutrients. So the category has a clear role in the life of the Indian consumer. It's still underpenetrated. For instance, our portfolio, which is the high science adult functional portfolio, is already in excess of 500 crores and is going very, very well. So we are serving, and so far as sugar is concerned, we have in any serving of Horlicks, far less than a teaspoonful of sugar, added sugar. There's of course sugar that comes with the preparation itself, but the added sugar is amongst the least in the industry. So I don't think this is of material significance to us. And also the recent discussion was more to the infant category, which we don't participate in. Specifically to your point about the Unilever's position on ice cream, we are under evaluation, exploring all options with our board, HUL's board and the management. And when we have clarity on where we want to go with it, and we will have a clear position, we'll come to you. But at this stage, it's all under evaluation.
Have you put any timeline on evaluating the future of the ice cream business?
No, there's a Unilever timeline, and we will be well within that.
Premium personal care in particular, beauty and wellness, from the next quarter onwards, you will have reorganized your business in that manner. The street is a little more aware of how this performance or this part is performing by virtue of the listing of a D2C beauty and personal care player recently. On those comparable products, has your growth been higher than them?
I don't want to speak to other competitors. All I can tell you is that we're gaining market share. First of all, yes, we are growing we're growing robustly, well into double digits and beyond in our premium skincare portfolio. We are growing well ahead of the platforms in the platforms we compete. We're gaining market share. We're very excited with how our innovations are performing. We're very, very focused. In fact, we have 6 multi-year bets, sunscreen as one, or facial cleansing as another, and light hydration and so on and so forth. And if you just take the bets that we have chosen to compete on, they by themselves are close to almost 2,000 crores in scale and are growing well over 50% in e-commerce. So if there's a if you can draw a comparison, you can draw from that. So there is growth in the sector, and there's growth in the more premium ends of the sector, and we are basically leaning in on that.
If you could, give us some more granular detail on the segment that starts from FY25, beauty and wellness, and then there is personal care. What proportion of current personal care revenues goes into beauty and wellness, and what rate is that likely to grow at?
So let me just give the proportion of the business. So overall, our beauty and personal care business, which you know the scale, is roughly 50-50. Let me say 55-45. 55 will sit in the beauty area, and 45 will sit in the personal care area. And within beauty and well-being, again, we include hair care, we include skin care, and we include color cosmetics. In the area of personal care, we will end up including skin cleansing business, the soap business that we have, oral care, and deodorant. So those are the segments between the two. And those are the rough proportions, 55-45 in terms of turnover. In this quarter, as we have overall sales, we have grown beauty at beauty and well-being at 4%, and personal care saw a decline of 10%. Within beauty and well-being, as Rohit called out, premium beauty has grown double-digit. It's the mass beauty which has declined in the quarter. And again, mass beauty is very much clearly linked to what's happening in rural and the macros, where discretionary expenditure is still under stress, not fully out. As essentials have started to come out, discretionaries will start to come out as we start seeing further recovery happening. But premium skin at a total aggregate national level has grown at double-digit. And Rohit did call out that the big bets that we have, the portfolio which is more prominent in e-commerce, in modern trade, overall these 6 bets put together is a 2,000 crore plus portfolio growing at double-digit. And as Rohit called out, e-commerce section of that portfolio is growing at 50%. So there are parts of the business which are very clearly responding to where the demands are, and we're growing very competitively on those focused areas of growth. Personal care business, within that, skin cleansing is a focus area. That's a business which has declined in the quarter, impacting overall BPC growth, impacting the personal care number which I quoted to you of -10. And in that area, it is, of course, the price is the first impact. Remember, that's the area we have taken down the pricing, and that's the area we have also seen volumes getting impacted in the quarter. This is especially the mass end on pricing linked of skin cleansing, and the point that I mentioned earlier, we have already corrected our pricing for the mass skin cleansing.
You said that this year you would see low single-digit price decline. At what point does the volume outpace or offset the price so that we see positive revenue growth? Is it in the second half of this year, the first half of this year? What we're trying to get at is growth going to be back-ended, or do you see immediate recovery in the next couple of quarters?
Let me just correct the pricing comment which you made. First of all, we already are positive overall revenue growth. We have grown by 1% this quarter, and I mentioned within that 2% is the volume growth. Pricing, what we mentioned, will be negative in near term. So I'm talking more of a quarter or so. In midterm, which means a couple of quarters down the line, I expect that to get plateaued down. And the second half of this financial year, we expect price to start being low single-digit positive. So we should see price recovery coming in as the financial year goes. Of course, it all depends upon where the commodity markets are. If they run up more, it might be more pricing. If there's another different outlook for the market, commodity will be different. But where commodities are today, that is where the pricing outlook is going to be.
And our job in the meantime is to drive volume growth, drive our premiumization of mixed growth, which again, as I keep saying, is to transform our portfolio to go where the growth is. And that will make us stronger, irrespective of what the future holds for us.
Are there any structural steps that you're taking to go past that 4% volume growth that has been happened over a decade?
Yes, which is we are investing in high growth segments. We are investing most of our innovation investment is in the high growth areas. Most of our media investment is in the high growth areas. And we want to double down on that because small segments are seeing triple digit growth of small channels, but there are segments like brands like Lakme and Pond's in beauty care, or smaller brands like Hellman's and Kisan in foods, where there's a lot of growth for us to be had by just extending distribution, extending awareness. So there is, in the market, there is growth. It's not evenly distributed.
Well, for shareholders who've been sitting on HUL for a while right now, the stock has underperformed the comparable FMCG index. Is there a final message that you'd like to give to those who would be holding your share?
We remain very, very optimistic about the country's future broadly, but also specifically in consumer goods. I've said that again and again, and it's an undeniable fact that is very, very strong commitment and belief. HUL is a strongest consumer goods company in this country. We reach 9 out of 10 households. We have 85% market leading positions. We have enviable, distinctive capabilities, whether it's brand building and R&D. We have 90 years of history. So when you buy an HUL share, you buy all of that and the future of country. And all I can say is that we should not be phased, and our long-term shareholders are not phased by movements in quarter to quarter. And we remain very optimistic. And as I said, we will basically transform the business to make it relevant for the future. And we would have not been here 90th year if it had not happened in the past as well.
Interesting chat there, Mangalam, with the management of HUL. For the time